Welcome to the video on Stan Weinstein's trading method. In this video, we will explore his principles for weekly time frame strategy. Concepts discussed in this video can be implemented on daily time frame and on short-term time frames as well. Again, what I will explain here is extremely simple, and this is something you can include in your trading strategy right away. So let's get started. So let me begin by stating that Stan Weinstein is an absolute legend in stock market. Perhaps he's the most underrated investor and trader of his own times. Now, I have personally learned a great deal from his book, that is Stan Weinstein's Secret of Profiting in Bull and Bear Market. If you have not read this book, I would strongly recommend for you to read this book, and I can guarantee you that your way of looking at markets would change forever. And do note that in my opinion, this would be one of the best investments you make in your own career. Now, I have posted the referral link to this book in the comment section below and in the description box below. Do check out the same. So Stan Weinstein's concept of buying and short selling stock is fairly simple. In this video, I have taken up how to buy stocks, and in the next part, I will take up how to short sell stocks. All concepts discussed in this video are of Stan Weinstein's teachings, and therefore all credit goes to him. Concepts here can be traded on daily time frame or on weekly time frame chart. You can even try this on a 60-minute time frame chart, but whipsaws will be more in number. So in this chart, I have marked out a 50-period weekly moving average, relative strength indicator, and 50-period moving average of the relative strength indicator. For those of you who are new to trading, do note that RS indicator is completely different from RSI indicator. And I have done a 3-part series on RS indicator. Link to the same will come up at top right end of your screen. So before we get started, let me tell you that please do not attempt to apply this method on junk stocks. It simply won't work. Prefer your watch list to be top 200 or top 300 stocks based on market capitalization. This would actually include combination of large caps, mid caps, and small cap stocks. The first component that you see on the chart is a 50-period weekly moving average. Stan Weinstein actually recommends a 30-period average, but based on current market conditions, you can prefer 50 periods to catch price trends better. Do note that moving averages are lagging in nature, but are excellent tool to identify bullish and bearish bias in the market. As a rule of thumb, as far as this strategy is concerned, prefer stocks that are clearly above the 50-period weekly moving average. And they should also be above the near-term resistance levels that I've marked on the chart. The more you focus on such stocks, the higher the odds would be for your positions to perform better. The second component of this method is to include comparative relative strength indicator, that is RS indicator. Now, Stan Weinstein in his book has used Mansfield RS indicator, but since that is not easily available across all technical analysis platforms, hence you can use this indicator. In my own experience, I have found the standard RS indicator to perform much better. Link to the RS indicator for TradingView is given in the comment section below. In his book, Stan Weinstein is very clear about how to use relative strength. Stan advocates buying stocks where relative strength is clearly moving higher. This means focusing on only those stocks that outperform the broader market. In this chart, relative strength of BPCL stock was plotted over Nifty index, which is the benchmark index for our markets. In case you trade in European or American markets, you should measure relative strength over S&P 500 index. If you look at this chart, you should have focused on buying BPCL between 2014 and 2018. This was when relative strength line was clearly trending higher. In the current phase, RS indicator is clearly moving lower, and when you spot this, avoid buying the stock as it is underperforming the broader market. I hope this overall concept is clear. The third component of this method is focusing on price action. Now, there are two main conditions to check here. Number one, price should be above near-term resistance, and number two, clear wide range candles should be visible on the chart. In this chart, if you see, wide range bullish candles clearly represent bias of price trend, and this is what you should look out for in a stock. Do note that if a stock is breaking out above long-term resistance level, it would be very positive for the stock. This is again a very underrated concept in the stock market. Now, as a trader, you should only focus on those stocks that are breaking out in stage 2 phase. Now, stage 2 is a phase where stocks moves higher with momentum and trending structure in this phase is clearly visible. If you look at Stan Weinstein's method, it clearly emphasizes on analyzing stocks with respect to stages. This is mainly done to give overall perspective on long-term structure of a stock. In this chart, I have marked out 4 stages of a stock cycle, and this is something you should learn as a trader. Now do remember that your main aim here is to only focus on stage 2 stocks that are moving higher. So let me now explain why this method is not perfect and clearly not holy grail in stock market. This chart is something you will see quite often wherein price trend and relative strength trend is not clear. This is quite common and you have to embrace the fact that not all stocks will be trending at all times. In this chart, price is seen overlapping over 3 to 4 years and same is visible on relative strength indicator. This just reflects that stock is not being preferred by investors and traders and you should avoid looking into such stocks. As a rule of thumb, only focus on those stocks that are moving into stage 2 and are not facing any near-term resistance. I hope this aspect is clear. So let us look at one example here of Reliance Industries. Now between 2014 and 2017, Reliance did not move much in terms of stock performance. In mid of April 2017, stock broke out of a 3-year resistance level. Something similar was visible on relative strength line as well. When you spot something like this happening, always pay attention to the stock. This is a clear case of price transitioning from stage 1 into stage 2. And when price moves above a well-established resistance region, it should be looked at closely. Now, this is one of the ideal cases that you should focus upon. Look for just 3 main conditions. Number 1, price should be above the 50-period weekly average. Number 2, relative strength line should be trending higher. And number 3, both price and relative strength indicator should be above established near-term resistance regions. I hope this is clear. So let us now look at a current example, as it is easy to analyze a chart in hindsight, but it is difficult to execute trades in real time. So this is the chart of Wipro. Price here has staged a fresh breakout above a 4-year-old resistance range. The important question here is, should you go ahead and buy this stock? Now, based on what I see on the chart, I would not prefer to buy the stock. The main reason for this remains the poor structure of relative strength line. Now, while price has moved above an established resistance region, relative strength line is still not positive. I would have looked into this stock had RS line been above a 4-year-old resistance range. Clearly, this is not the case in this stock. So let us now look at continuation trades as examples. Now, there are many stocks in the current market cycle like HDFC, HDFC Bank, Titan Industries, Bajaj Finance that keep giving continuation trades in market. Do remember that for each cycle, these set of stocks change and hence do scan for such stocks once in 3 months. Continuation trades are when price consolidates and breaks out of a range, and the same is exhibited by RS line as well. In this chart, I have marked out regions where price and RS line have broken out simultaneously. Such setups are very reliable and should be focused upon. With price breakout, stock signals further up move, and with relative strength breakout, it signals continued outperformance. Now, this in my opinion is a very powerful combination and this should be traded regularly. Do note that stocks exhibiting such patterns will be some of the best companies in the market, and hence while buying into these, you will have good amount of margin of safety on your trading or investing capital. So let us now look into an ideal case playing out in real time. Hopefully this example will help you understand things better. Now this is the chart of Berger Paints. If you look at the price section, stock has broken out of a 16-month resistance region. Now look at the relative strength line here. There's a clear breakout visible where relative strength line has moved above a 24-month resistance region. The message here is very clear from the stock. It is trying to head higher and it is outperforming the broader market. These are the stocks that you should be buying in the market. One important point that you have to consider is that broader market trend does have an impact on how the stock moves. For example, had the broader market trend been positive, this stock would be a clear buy at this level. Now, since the broader market trend is down, I would actually limit my position size in order to protect the capital. I hope this particular point is clear. Now, do watch the previous videos on relative strength that I've done, as I've covered many concepts in great depth. Link to all these parts would come up at top right end of your screen. I would also strongly recommend for you to read Stan Weinstein's book, as you will learn a great deal about how to buy stocks. Meanwhile, if there is any doubt related to any topic of this video, then do let me know in the comments section below. So kindly consider hitting the like button and sharing this video if you find it useful. Thanks a lot for watching this video, guys. Take care and be safe.